Hey there, everybody. Andrew Mitchem here at the Forex Trading Coach. Welcome along to the Monday session for the Eightcap Trade Zone. Awesome to be here and looking forward to another week of some great trades and bringing you some really good information. I hope you've had a great weekend and that you enjoyed last week's two sessions as well. And so just a reminder that there were two last week, which you can go and watch the recordings, and we'll be holding two live sessions this week. One obviously right now, and then one this time on Wednesday. So ask questions and use the comments chat area if you're on live. If you're not live and you're watching a recording, make sure that somewhere down below you will find on the YouTube link there, and you can then jump straight on and ask questions there, and we'll make sure we get those answered for you. So on today's session, I wanted to do a number of things. We're going to jump straight into some weekly chart trades to start with, and then I'll cover a couple of daily chart trades that I've taken today. 3 weeklies, 2 dailies, and then we'll have a look at the monthly chart trades that I shared and discussed here last week, and just to see how those are going. So yeah, any questions as it's just popped up there? Eightcap have just said anything, please ask away, and feel free to share any discussion and any particular trades, and I can go and have a look at those for you. Also, wanted to let you know about the Eightcap website as well, which is a fantastic site here with the client login portal area with their economic calendar. One thing just to be really careful with things like this is it's really good that you look at these type of events that are happening here, because a lot of people would have been caught out last week by missing out on the US non-farm payrolls, because generally it's the first Friday of each month. And you would have seen that this week, non-farm payrolls are actually this coming Friday on the 10th instead of last week on the 3rd. So, you know, things like that, really important that you keep up to date with these economic calendars. Even if you're like myself, who's purely a technical trader, really important that you have a look through these events just to check day by day what is coming up next. All these are defaulted to your own local time zone as well. So it's a great thing there. And as mentioned last week, Eightcap have got a couple really good calculators on here, margin calculator and profit calculator, for you to have a look at if you're a client of Eightcap there. And the link's just been popped in the comments link. So let's get straight into some trades, shall we? So obviously, beginning of the week, the market's been open for 7 hours now. And I want to share with you 3 weekly chart trades that I've taken. I'm going to explain the trades for you. These are weekly trades, so potentially could be in the market for a little bit longer. But the pattern is what I'm looking for. And the pattern doesn't matter what the time frame is, what the currency pair or metals, as in this case, is, or the direction. The pattern is what I trade. So this is gold against the US dollar. And so with this here, I'm looking from this low back here at the end of October of last year. Notice how there's a triple bottom down here. 3 candles there. 1, 2, 3, 4, 5, 6 weeks in a row. And out of those 6 weeks, 3 of those weeks came down and touched that sort of $1,615 area for whatever reason. But we don't need to know why that happened. What we need to see is it actually happened. And then what we had after that is a complete reversal. The price went all the way back up here to just sort of shy of that sort of 2000 level. So that clearly demonstrates an uptrend, okay? So that's our first thing we're looking for. Lovely uptrend there. By the way, a few weeks ago, I took this as a sell trade, and it's just hit the profit target last week. And that was a reversal. Now what I'm looking for this week, so this is a trade that I've taken live today, around 6 hours ago. So I always wait for the first hour of the market to pass, because the spreads, doesn't matter who your broker is, the spreads are generally a bit high. Also with metals like this, they don't actually open until 6 p.m. New York time. So you can't trade that first 1 hour of the week or all the day on metals either. But what I'm seeing here and depicted by my own proprietary software is an outside candle, what I call an outside candle. That means that the low of last week's weekly chart is lower than the previous candle, and the high is higher than the previous candle's previous high. So what we have now is a swing low. And you may have heard me say, I like U-shaped patterns. So if you can imagine like a small letter U here, we're starting to see that U-shaped pattern occur here. What I also like to see is a reason for a bounce, because don't forget, overall we've had an uptrend, but more recently it's been in a downtrend. So it's a retracement or a pullback. I know it's a great continuation pattern because it's pulled back to the middle Bollinger Band. Okay, so that's a really good, strong level. What I also like to do is look at the price. And right in here, you can see the low of last week's candle was at 1,804. So pretty much bang on $1,800. So it's now bounced at a strong round number, a 00 number, $1,800. What else do you see on that chart? If I hold my crosshair there at the low of last week's candle, what else do you see? If you look left, there's a really big clue of another reason why I might be seeing this as a strong bullish bounce and strong bullish candle. Just type in and let me know. And while you're doing that, Heidi, do you hold your trades through big news like non-farm payrolls? Yes, I do, definitely, especially on like the weeklies and the monthlies. Absolutely. Sometimes the dailies, depending on how they're going, because it's the end of the week, I might look at closing part of the trade or even all of the trade. But most of the other time frame charts, the news or any other news events, they don't concern me. Yes, so what we're looking at here is a support resistance bounce. Richie, bullish engulfing, yes, it is. But what I'm looking at now, Richie, is the reason why it's bounced. So first of all, it's bounced off the middle Bollinger Band. Fantastic. Secondly, it's bounced at $1,800 through here. If you look on the right-hand side of my chart. Thirdly, the other point is it's a fantastic support resistance level. So have a look at this high back here in August of last year. We've got almost like a double top there. And last week's candle is exactly off that level. So this became a resistance level. There's our N shape and the price fell. It's now done its thing over the last year and a bit, or that's August. So 6 months, let's say. And now it's come back here and used that same level as support. So what was resistance as in a high now becomes support as in a floor, a low. So that's all looking good. Now I'm getting quite excited when I see a pattern like this. A continuation pattern, because that's safer. It's trading with the big uptrend after a pullback. We've had our swing low, our U shape, our middle Bollinger, our support resistance, and our round number. I now have 5 things here, all saying to me this is likely to continue up. On top of that, I have a trendline break. Perfect trendline break. I have a very strong close to the candle of last week, plus the absolute just icing on top, cream on top here is a positive hidden divergence signal with our stochastics here getting massively lower as the lows in the price have got higher. Not a great deal higher, but the stochastics certainly dropped. So that's a continuation pattern. Put all that together with the fact that my profit target is well before the swing high and well before the upper Bollinger Band. That to me is a fantastic looking trade. So I'm entering part of my position at the market and also part at a retracement. If the price first retraces, I've entered a buy limit. So if the price pulls back here, it then gets me in for a buy, and then I'm looking for it to turn around and go higher. So that was a great looking setup. The second one here is gold against the euro. Not quite as good, but still good enough, in my opinion, to take the trade. A little bit flat and a little bit yuck through here, but then we suddenly had the uptrend, double indecision candle, it's pulled back. The previous candle here was this little red candle of the week beginning the 19th or the 20th of February was an indecision candle. Then last week we had a new swing low formed. Look again where it bounced. Have a look to the right-hand side, and you'll see it's bounced at exactly 1,700. So it's now bouncing at a strong round number. A U-shaped pattern starting to form. Trend line breaks in play there. And again, profit target before the swing highs up here and before the upper Bollinger Band. So I would suggest that the gold US is a better pattern, but gold euro also is pretty good. And the third trade I'm taking, the market's not open yet. This is on the Canadian 60 indices or index market here. Hover over that, you see it says Canada 60 index. So as a Forex trader, because we have the ability now, the likes of Eightcap are opening up so many more markets for us, and with MT5, we have the ability as technical traders to trade the pattern on so many more markets. I've hardly ever traded the Canadian 60 before. If you went back a year or two ago, I'd never seen it even, let alone traded it. But now I have the ability through brokers offering more markets like this to trade the pattern. Now, this market's not open yet, but when it does open, providing it doesn't have any major significant gap up or down, I will be taking a buy trade here with this uptrend pullback, the U shape that I've talked about, a small trend line break of the last two candles, and I'll be riding it back up to these swing highs here. Again, to get my reward to risk out of this trade, I'll be entering this trade as a buy limit. So first of all, I'm looking for the price to drop and then fill my buy limit order to get up to my profit target. So what that does is it massively increases my reward to risk, because if you took this as this is not where I put my stops. I'm just giving you an example now. Let's say I entered at the market open here and I put my stop below the low. Let's call that for easy numbers. You can see it says 29, or let's call it 30 pips, okay, or 300 pips, whichever way you want to call it. I'm going to call it 30 pips. That's a stop loss, but my profit target up here is really only going to be about 17 or 18 pips. Not very good. So what I do is I enter a limit order, a buy limit, and my stop loss is going to end up being about 8 or 80 pips here, but my profit target is going to be about almost 30. So you can see that I'm almost a 3-to-1 trade on this, as opposed to a very small reward to risk. And that's how I ensure that my trades are profitable and high gains when they're profitable trades. Reward to risk is massive. So those are my 3 trades for today. Anybody who's just joined in the last few minutes, there's a few people on here asking questions. Feel free to ask more questions. If anybody has anything, don't be shy. We're on live, I know, but just type in. No one else can see your questions, so just type away anything that you want me to discuss. I'm more than happy to do so. So take advantage of this opportunity. So let's move on to the daily charts. I have got a buy trade on the pound New Zealand dollar today. So this is off the daily chart now, okay? So pretty flat through here. Not a lot happening on that over the last few months, but then more recently, last week, we had a big uptrend and then this pullback. We had an indecision candle here, and then on Friday's completed candle, we had the engulfing bar, because the body of this candle engulfs the previous body. So after this pullback, strong candle, really strong candle, 2 in a row, then there was suddenly a stalling. And you look at that and go, well, what happened? Hard to really tell, but an indecision candle after a massive drop. You could argue there's quite a few highs through here, so it's stalled and lows back here at quite a strong level. And then you start looking for levels and round numbers, and it's stalled at around 192. Still no trade until we get Friday's candle, and then we get the strong bullish candle, which suggests that this overall uptrend is going to continue after the pullback. That's why I've taken a buy trade here today. My stochastics are low and rising, and taking from that swing high down to the previous candle, there, 3 in a row. You can see a perfect downtrend, and I've broken that. I haven't. The market's broken that with the close on Friday there. So looking to ride that back up to just below the 194.60 area on that one. And my other daily trade for today is the euro pound, and this is retraced beautifully, and now I'm looking for it to drop. So what I have here on the daily chart again is a pullback indecision candle on Thursday, Friday's engulfing candle here, quite a small candle. The euro pound doesn't often move that much, but Friday's candle was not big. My only slight reservation with it is about pretty much 45 pips, quite small. And so I've taken a retracement order, which has just been filled. My retracement order was at 88.40, 0.8840. You can see it's just been filled right there. I have a stop loss on that trade of 88.55 and a profit target of 88.03. So only a 15 pip stop loss and a 37 pip profit target there. And so my profit target, I've lifted it above the 88 level. What I didn't want to do was aim for the support 3 level here at 0.8798. You'd be crazy to take a profit below a round number on a sell trade. That's just not a wise thing to do, because so often the price will probably come down to about 88, 03, 02s, and then potentially head back again. So I've taken my profit target at 0.8803 up here. So I've sacrificed a few pips, but I've got safety and common sense and probability in my favor. So great retracement entry. I'm now looking for that to fall. Heidi, support and resistance level. You're welcome. Would you trade half size for each gold trade since they are correlated? Yes, you could certainly do that, Heidi. You could definitely do that. You could, on your weekly charts, you could take a reduced risk and put half of your total risk on the gold US and the other half on the gold euro. Not sure who this is here. Are you looking at any majors today? Definitely. I'm looking at them, but I didn't see a great deal on my charts on the daily trades for today. I'm just going to drag another page on here. This is off my Forex Trading Coach course website, when I've actually mentioned where I'm looking for strength today. In the pound and minor strength in the yen, franc, and Aussie. And I'm looking at weakness in the Canadian US and minor weakness in the New Zealand euro. They're the two trades I've just discussed with you on here. And down here, there's a summary of the different currency pairs and the directions that I'm looking for today. So I'm looking for ideal opportunities and buying opportunities in the pound, US, Aussie, New Zealand, these here, and selling in these. It's not to say that they're going to close in that direction. It's to say, let's say, for example, if I see a 4-hour trade or a 2-hour trade setting up on the pound US dollar today and it's bullish and it's a buy trade, then it's trading with my likely daily direction. So that's what I'm preferring. Interesting down here, there was a trade I took last week, gold US, and that hit a profit target on Friday for 3.5 to 1. So really, important that you get those high reward to risk trades there. 3.5 is a good reward to risk. Okay, any other questions just come through? We've got about another sort of 7 or 8 minutes before we finish. But what I'd like to share with you now is some progress on some of the monthly chart trades that I covered on last week's session. So the great thing is with these 8-cap sessions is that we're going to do 10 of them. We've done 2. This is number 3. And, we've got 7 more to go. Over the course of March, you're going to be able to see how these trades are going as well, especially good on these sort of longer term charts. So let's start with the US Chinese yuan. That has retraced beautifully, and it's got me filled at this retracement level, and now I'm looking for it to go up. So right now it's in profit, not a lot yet, but it's starting to move. Of course, early days at this stage. The US Polish as well, and that had a fantastic retracement entry last week. So these are monthly charts. These will probably take a little bit longer because they're monthly charts. If you want to see the reasons why I've suggested this is a buy trade, have a watch of last week's recording. But I've taken a buy limit. It's been filled, and now it's starting to move back up again. And so that's a trade that's in the market there for the retracement order and the market order. My US yen has not yet retraced to get filled at the limit order, but the market order is kind of not really going anywhere yet. But again, early start to this week. The US Danish kroner has not retraced enough yet to get my limit order in on that particular trade there. The US Thai, let's see if I can find that down here somewhere. It's there. This is just about to retrace. In fact, if I look on a different account, I would suggest that that's probably just filled my buy limit order there. And the last of the bullish setups was on the USDX, which I think it's around here somewhere. There it is. And that has not quite been filled on the limit order. And let's just cover the sell trades from the monthly charts just to see how they're going. So euro on the monthly, let's put that on here. So this actually would have filled as well, just been filled. So this has pulled back beautifully to my retracement entry, and it's now starting to fall. So again, you can see reward to risk and how it works. Heidi, you like the high reward to risk trades that you go for. You have 2-to-1 minimum, and that's a great minimum. With the way that I trade by using my fib levels for retracement entries and extensions, pretty much most of my trades would have 2.5 to around a 4, sometimes a tiny bit more reward to risk. Shorter time frames, you can sometimes get a little bit more depending on the setup of the candle. But yeah, a 2-to-1 minimum, I think, is an absolute must. But the issue that people need to be careful is when people incorrectly start saying, I have X number of pips as a stop loss, let's say 20 pips, therefore I'm going to have a 40 pip profit target. That's not a good way of trading. Don't just pick 2-to-1 just because it's an easy number to calculate. Or I said it should be 2-to-1. It needs to be, you trade with what the market's showing you. But the way that I enter and exit, I'm always guaranteed to get more than that 2-to-1. Do I have separate accounts for monthly and daily trades? No, I have multiple different accounts personally, but I don't distinguish between some only on monthlies and some only on dailies. Depending on where you live in the world, if you can hedge or not, you might want to, potentially have, let's say you had a monthly chart where you needed a buy trade on the Aussie US dollar and a daily chart where you needed to sell. Well, some brokers, if you're in the States, etc., you cannot do that on the same account. So it could be a bit of a way around the hedging rule. But I didn't say that. So euro US dollar here. That's a great looking setup, and I'm really pleased with the way that that's progressing. Let's move the other way here to the Aussie US dollar. And that hasn't retraced enough yet for me to get my limit order in. But again, there's still time. With a monthly chart trade, I'm going to give this the entire month to give it a chance to come back and get filled as a sell limit. So I work on a one candle principle. If I have a limit order in and it's on a daily chart, it has the whole day to get filled. If it doesn't, then I delete it. Or if the price then goes in the direction of my trade and gets towards the profit target without filling my limit order, then I delete my limit order early. And if we then, and yeah, exactly the same if it was a 4-hour chart. If it's a 4-hour chart, I give it 1 bar or 4 hours to get filled. If it doesn't, then delete it. Or if the 4-hour chart on a buy trade, let's say, heads up and you're in a market order and it heads up beautifully, but it hasn't come back and filled your buy limit, make sure you delete that buy limit order early. I think the New Zealand US has just about got me filled as well. So that's pulled back beautifully, and that's now in a bit of profit. You can see the advantage here of taking limit orders. They're a hugely valuable way of trading. The Euro Hong Kong dollar has just filled my limit order, my sell limit as well. So that's going really well. And the last of the monthly charts is a trade on silver, which is that one. That has not retraced enough yet to fill my limit order. So those are the trades that I've got open so far. On Wednesday, what we can cover is some more daily charts. We can see how today's daily charts are going. We can have an update on the weeklies. We can have an update on the monthlies. Plus, I'll have some shorter time frame trades that hopefully I've taken today, sort of Monday, Tuesday, leading into Wednesday's session. I can either share trades that I've taken or some of my coaching clients have posted on our forum site, and bring you a mixture of shorter time frames and longer time frames. So any questions, please send them through in the next sort of 30 seconds or so. But otherwise, I think we've covered everything for today. Hope you enjoyed that session, and yeah, look forward to catching up with you on Wednesday. Don't forget that the YouTube recording will be available to watch straight after this, plus the previous 2 from last week. So I'd like to thank Eightcap again once more, and awesome brokers, and they're doing a great job in the Forex market. And look forward to seeing you all on Wednesday. So this is Andrew Mitchem. I'll see you then. Bye for now.